we are going to learn about cash credit and overdraft. Cash credit, let us know what it means. Cash credit, also known as CC. CC loans were created to help businesses maintain their working capital requirements. An in-depth look into the CC meaning describes CC as a line of credit provided to businesses and companies by banks that supports the organization's instant cash requirements and purchase of assets. The customer can use these funds in routine financial transactions up to the mandated borrowing limit. Now let us know about the features of cash credit. The fund's purpose, the fund's distribution, borrowing limit, collateral is a requirement, interest charges, credit period, and loan repayment. Criteria for the lenders to assess a business cash credit loan. Financial statements that are certified by a chartered accountant, CA, accurately describe an organization's financial position and cash flows. A bank account statement listing transactions made within a minimum of 6 months. Tax returns for at least 1 year and obtained from a relevant tax authority. Loan repayment record. This criterion only applies to businesses that have a loan history. And a legally legitimate proof of collateral letter detailing the specific nature of the collateral offered. Now let's know the advantages of cash credit. An excellent way to fulfill your need for working capital. This facility allows for simple access to cash or liquidity because it functions similarly to a secured loan. Additionally, it enables quicker processing. Perpetual term, flexible options for repayment, lower interest costs since only the sums borrowed from the enlarged total are charged to interest. Several withdrawals, and these loans' interest is tax deductible. Let's see what are the disadvantages of cash credit. The borrower's prior performance, the borrower's capacity to repay, the business organization's current assets and current liabilities. The security or collateral is used to protect the cash credit facility. And the credit history of the borrower. Up to now you came to know about cash credit. So now let's discuss about other subject, that is overdraft. So a bank overdraft is issued by a bank when a customer has a low or zero balance. Customers can utilize this facility against fixed deposits, salary accounts, shares and bonds, and properties like houses. Banks charge interest on the actual amount borrowed by the customer. Now you know what overdraft is. So let's see there are how many types of overdraft is there. There are 2 types of overdraft. First is intraday overdraft and the other is end of day overdraft. So first discuss about intraday overdraft. In intraday overdraft, the bank has a fixed credit limit up to which a customer can overdraw money. Customers can withdraw money within the limit, ensuring that the outstanding balance is within the normal limit before the end of the day. And intraday overdraft is bigger than an end of day overdraft. Now let's discuss about the other one, and that is end of day overdraft. This overdraft helps the borrower to balance out receipts and payments. The customer can bring back the outstanding balance to normal limits within a few days. And end of day overdraft is smaller than an intraday overdraft. After the types, let's know the features of overdraft. The credit limit depends on the customer's ability to pay it back. Therefore, the amount of credit offered is based on the customer's financial history and the present capacity to repay. A credit is availed when money is needed. Customers can borrow money from the bank whenever their account balance drops. A customer can take credit with zero balance in the account. Interest is paid according to the use of credit. A customer has to pay only when they have the credit money. It can be a year, a month, or even a day. Prepayments on an overdraft are not allowed. There are no pre-charges for bank overdrafts, meaning the customer does not need to pay any money to obtain an overdraft. The customer repays the overdraft along with the interest charged by the bank. Repayment occurs when the customer has sufficient money. The customer can pay according to the current financial situation. She or he can pay a small amount at one time and the rest later when they have sufficient funds. Repayment does not occur in installments. Now we know what are the features of overdraft. So now look on the advantages of it. And they are: bank overdrafts are flexible, fast approval, saves the customer from embarrassment. After the advantages, let us know what are the disadvantages of overdraft. They are: bank overdraws are expensive. The banks can retract bank overdraft. There is a risk on security assets. For now you are came to know about cash credit and overdraft, and their details. So now let us know what are the differences between cash credit and overdraft. Let's see. First, cash credit has lower interest rates whereas overdraft has higher interest rates. Second, cash credit availed on hypothecation of stocks and inventory whereas overdraft availed on the basis of account holders' financials, credit history, relationship with the bank, and investments like FDs, insurance policies, etc. Third, cash credit availed for majorly business purposes like working capital whereas overdraft availed for general purposes, including business related as well. Fourth, cash credit provide loan amount is based on the volume of stocks and inventory whereas overdraft provide loan amount is based on the financials and security deposits. Fifth, cash credit limit does not reduces over time whereas monthly reduction in the case of overdraft. Sixth, to avail cash credit, a new account needs to be opened whereas overdraft facility is availed on the existing account of the applicant, account holder. Seventh, cash credit availed for a minimum of 1 year whereas overdraft availed for shorter tenure like a month or quarter, maximum of 1 year, with yearly renewal option. Eighth, cash credit availed by individuals, retailers, traders, manufacturers, distributors, companies, partnerships, sole proprietorships, LLPs, etc., whereas overdraft availed by account holders of the respective bank. Ninth, cash credit amount sanctioning is based on the business performance and market situations whereas overdraft limit is sanctioned based on financial statements and security deposits. Thank you for learning from options and ideas.